practically, if you are in India and you want to hedge, what are the steps you need to take? You can do the hedging with an international broker or with the OTC market. If you are doing it with the broker, then an LME broker or a CME broker is important. And that broker will offer you access to the LME or CME, and through that you can hedge. To set up that, you require a form fill up, KYC documents. These are the two things needs to be considered. And you will also need a risk management policy, which you need to give to India Ready Bank. Also statutory auditor certificate, and you need to understand that how the margining system will work, provide the margin, and then do these. I'll come to these steps in details. So what are the considerations you need to have? First do an accurate estimation that what is your risk. Like if you are selling in 6 months, how many days procurement you are doing, and then you decide the quantum which you need to hedge, or your exposure. And then we suggest generally that you hedge for a smaller amount of that quantum. Like if your exposure is, let's say, 50,000 ton annual exposure, or at any point of time, you start your hedging with a smaller amount and test the market, and slowly you build up your hedges. So this is the business risk you need to estimate. One of the very, very important factor in commodity hedging is basis risk. So for example, if you are hedging Forex, you buy dollar, that same dollar which you pay to your counterparty, same dollar you get from the bank, the same euro you get. It's the same thing which you are hedging. But in commodity, you may be buying a particular grade of steel, but what you are hedging is a different grade of steel. So the prices will not move with 100% correlation. And that gap in the correlation is the basis risk, which needs to be managed, which needs to be mitigated, minimized, and managed. It should not happen that, basically you are not hedging X exactly with X. You are hedging X with X1. Both are X, yes, both are steel, but the contracts are not exactly the same and the correlations are not 100%. Your price may go up, market price may go down on a particular day. But overall, there is a good correlation of 80-90%. Or maybe 98-99% in many times. So what you buy and what you hedge, are they same? That is a question you need to ask. So this requires extensive data analysis and long-term data analysis. Little bit of looking at it carefully is required. This is, I think, one of the most important area in commodity hedging. So what you need, if you are trying to hedge from India, then you also make a strategy, like which instruments you will use. There are forwards, options, structured products, when to hedge, how much to hedge. So one risk management policy should be good. And so policy making, broker selection, completing the regulations and compliance, execution of the trade, and then it's very simple. You execute the trades and monitor it.